A structural shift is forming on the XRP daily chart. We're looking at the exact mathematical coordinates of an impending violent wealth transfer as market dynamics suddenly reverse their upward trajectory. XRP Emergency. The 110 million short squeeze is starting right now. The bears thought they had total control, but they just stepped right into the ultimate trap. Despite the geopolitical chaos and the political gridlock in Washington, XRP held its macro support like an absolute fortress. The technicals have officially reversed, and the fuse has been lit. Over the past few weeks, a wave of geopolitical chaos triggered massive retail panic. The escalating US-Iran conflict pushed thousands of individual investors to liquidate their positions in fear. That fear was compounded stateside by political gridlock in Washington. The Clarity Act, a piece of legislation critical to providing regulatory certainty for crypto, was stalled in committee by the SAVE Act, causing even more retail sellers to exit the market. Look at this technical chart showing XRP's price action. Despite global fear, XRP flawlessly defended its macro support zone. The price dropped, but immediately bounced off this $1.30 to $1.35 level. Smart money accumulated here, generating massive volume and holding the line. The successful defense of this specific support zone proves that institutional accumulation is currently overriding macroeconomic fear. The smart money stepped in exactly when retail stepped out. For viewers in the US, do not let the political stalling of the Clarity Act blind you to the hard data actually printing on these charts. By the end of this broadcast, you will possess the exact mathematical coordinates of the impending short squeeze, along with the specific catalysts that will trigger it. You are watching Crypto Global News, and this is the critical insider intel you need to navigate the coming volatility. This candlestick chart reveals a confirmed trend reversal. The sequence of lower highs has broken. XRP printed a new higher high, exceeding the preceding peak. Look at the volume. 6 massive green candles pushing upward, dominating a mere 2 small red candles. This exact sequence of candles provides the mathematical proof that the bears have lost control of the trend. The buying pressure has overwhelmed the selling pressure, effectively setting the stage for a massive liquidity trap. Before we break down the exact $110 million liquidation cluster sitting right above our heads, and exactly why breaking the 1.51 level will trigger a violent cascade of forced buying, make sure to subscribe to the channel so you can ride this massive wealth transfer to the top. Returning to the daily chart, we need to examine the exponential moving averages. An EMA is a type of moving average that places a greater weight and significance on the most recent data points, making it the core engine that institutional algorithms use to track momentum. This chart displays the precise momentum trigger that just flashed, the 5 EMA crossing bullishly above the 13 EMA. When paired with the higher high formation we just identified, this specific crossover confirms a total structural shift in the asset's trajectory. This 5 and 13 EMA cross is the definitive green light. It is the mathematical signal for institutional algorithms to begin buying, pushing the price directly into the trap currently sitting overhead. With algorithmic momentum pointing up, our attention shifts to the immediate overhead obstacle, the narrow price pocket between $1.44 and $1.46. Traders identify this $1.44 to $1.46 pocket as a highly concentrated trap of short liquidity. Short liquidity refers to the mandatory capital that short sellers must spend to buy back an asset to cover their losing bets. This heat map visualizes the trap scale, roughly $110 million in short liquidations sitting squarely in this 1.44 to 1.46 zone. Breaching this level is unforgiving. The exchange automatically liquidates their position, forcing them to buy back at market price. Breaking into the 1.44 zone weaponizes the bears' own money against them. Their forced liquidations become the very fuel that drives the rally higher. The moment that initial 1.45 resistance falls, an immediate, violent sequence of events will follow. Zooming out reveals the secondary squeeze target. The forced buying cascade instantly propels the market straight into this 1.50 to 1.54 liquidity band. Sitting directly inside is a critical technical milestone, the 50 EMA, resting precisely at 1.51. The smart money knew exactly what it was doing. When retail investors panicked, the bulls defended the $1.30 support line and quietly accumulated. Now, the chart has printed a flawless reversal. We have a new higher high, and the 5 EMA crossed above the 13. Short sellers are currently trapped in a highly concentrated pocket between $1.44 and $1.46. There is $110 million waiting to be liquidated. If a single macro spark hits the wire, whether it's de-escalation or the Clarity Act, that resistance wall shatters. The forced buying will instantly slingshot XRP up to the 50 EMA at $1.54. The bears are out of time. This cascading algorithmic structure points to the $1.54 target as the logical conclusion for the move once the initial cluster ignites. The technical setup is fully loaded, but it requires ignition. Two specific macroeconomic sparks have the potential to set off this God candle. Spark number 1 is a sudden announcement regarding the de-escalation of the Middle East conflict. De-escalation triggers an immediate rotation of capital. Institutions pull their money out of traditional safe havens and flood it back into risk-on assets like crypto. Spark number 2 is a surprise markup vote for the Clarity Act. A markup vote is a legislative session where a committee debates, amends, and finalizes proposed legislation before sending it to the floor. A successful markup provides the exact regulatory fuel required for massive U.S. institutional buyers to enter the market with legal certainty. Either of these sparks hitting the newswire provides the volume needed to shatter the 1.44 resistance wall and start the $110 million liquidation cascade. Join the Telegram using the link below to get these specific spark updates the exact second they hit the wire. Head over to our YouTube community post and vote on which macro spark you believe will hit the wire first: Middle East de-escalation or the Clarity Act markup. If you are watching this without a subscription, you are missing the alerts. Click subscribe to stay on the timeline. It's completely free for you, but it gives me the motivation to keep making more videos like this. For our US viewers, strictly track the congressional docket regarding the Clarity Act markup this week. Treat it as your ultimate leading indicator. But you need to ask yourself, what happens when that $1.54 resistance falls and flips into macro support? The very next Fibonacci extension identifies a target that would put XRP at its highest valuation since the previous cycle peak. Click the card on your screen right now to see the exact breakdown of that next price target.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.